Lennar stock, ticker symbol LEN, reports earnings today, December 18th, after the market closes. And so in this video, we will analyze unusual option activity from today and a few days ago, and then show how we are trading Lennar based on our analysis. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's find out if wealthy investors are buying Lennar before earnings or selling Lennar before earnings. As usual, let's dive into the data. On the option time and sales tape, we can see here that there are these February 21st options at the 160 strike calls and the 185 strike calls. We can see multiple trades happening as well, all around at the same time at 10:06 a.m. this morning. You can see here the quantity and price that was being traded. However, this is not just 640 contracts, because when we take a deeper look at the option chain, we can see that there's actually a total of 3,000 contracts over here. You can see at the 160 strike calls and the 185 strike calls. We know these are opening trades because the open interest is much less at just 264 and 560. So these are not closing trades. These are new opening trades. And to open these trades right before earnings is highly unusual. And based on our analysis, they were buying the 160 strike calls and selling the 185 strike calls. And when we analyze this trade, we can see on the risk profile profit loss graph where the x-axis represents the share price of the stock, and on the y-axis we have the profit. Note the zero break-even line, and so when the lines are below that, it is a loss. So if the stock goes down, there is more negative loss. If it goes up, there is more positive gain, because this is a long bullish trade, and we can verify this on the Greeks. We have a positive delta trade, and we can also estimate the total trade cost, because each of these trades was about $498 of debit, and since there was about 3,000 contracts, we multiply that out and we get a total trade that cost $1.4 million. But keep in mind, this is an earnings trade, so it is higher risk in comparison to the trades that we share on our website. If you are interested in the higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here where we share better trade ideas with a lower risk and a higher chance of profit, because we analyze a lot more data for the trades that we share on our membership, such as more historical data. For example, a few days ago, on December 16th, we found a second set of data of unusual options that expired June 20. These options at the 175 strike calls were being traded. There was at least 2,000 contracts where they were buying these call options, which is also a long bullish trade. And since we were tracking these options, we know they are still opened. You can see here for the June 20 options, these are now opened at the 175 strike calls. The open interest has increased. So we know this wealthy investor is still in this position. And so based on this data, we decided to go long bullish, but we used our option strategy as a earnings trade that expires in just 2 days on December 20. And we use position sizing to manage our risk. And so you can see our trade over here where we have our positions. POS stands for position. Green means buy. Red means sell. But we have a different ratio here, because for each of our trades, at the 162.5 strike calls, we sold these, but we sold 2 for each of our trades. And then we bought the 167.5 strike call and the 152.5 strike calls. And so when we analyze our trading strategy, you can see here that this trade is also a long bullish trade. It is a butterfly strategy that costs $243 of debit each. And so that is our max loss on this trade, the risk on our trade. But notice that at max profit on the blue line, we could potentially make $757 of profit per trade. And so our risk to reward ratio of 757 divided by 243 risk is a 3.11, meaning we could potentially make 311% profit on this trade. So the reward is in our favor, and that is one of our strategies on how we trade, is we always want to make sure the risk to reward is in our favor so that we can always gain more than what we could lose. And so if we consistently do this, we have an edge in the market that allows us to beat it in the long term. And if you take a look here on the Greeks, you can see that we are going long bullish because we also have a positive delta trade. But what's very important about our trade is that our vega is very close to zero. And that is very important for earnings trades because we know that volatility will decrease after earnings. And we do not want that volatility crush. You need to understand how to use options in your favor. And that is what we do and share with our members. If you are interested in learning more about our option strategy or the stock picks that the wealthy investors are in before they rally, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below. Do you think Lennar stock will go up after earnings, or will it crash down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.